Good morning, good afternoon, and good evening to all you members of the TSB Nation. I'm Rustin Edwards, based in Geneva, with my illustrious world-traveling man of the hour, supporting jet fuel demand on an international basis, Mr. Matt Stanley.
Yeah, thank you. I had to get a map to remember where I lived.
I was going to say, I mean, where is that? Is that your house? You have a house?
No, I could see the smoke signals coming out of my wife's ears, so it was very easy to understand where my house was. No, it's been a very busy 5 weeks. I've exhausted Emirates movie options. I'm hoping Oppenheimer came out this weekend and Barbie. If either of those are on the plane yet, when I get on another one tonight, then I'm happy. But apart from that, I've watched every single movie that's ever been produced out of Hollywood, and of course, I was working.
Well, the way that the actors' strike and writers' strike is currently going on in Hollywood, that might be the next set of movies we see for a long time.
Yeah, I think there'll be a few patched up remakes going on, but we'll have to wait and see. But no, it's been a good summer. I've been lucky. It's been busy work-wise, had lots of meetings. I saw you. We had a face-to-face and a few beers or other beverages in Geneva. Weather was lovely. And then I was in Morzine with some friends. Been in London 3 times, Singapore last week. So it's been a very busy time. And I still think that Emirates is different because Dubai is a very transitory, it's a transitory hub because of such, it's wide body aircraft only, so many flights going to Singapore and Thailand and Australia and, the Antipodes, whatever. Every plane I've been on has been full. Maybe the odd seat at the back, but every single plane that I've been on has been rammed and the airport has been rammed. And that's not just in Dubai. Every airport that I've been in has been so busy. So, if you're looking at it from an energy demand point of view, it's just on in the prism of how busy things are. It's good. Summer's been busy.
Well, we got crude just hovering just below $81 a barrel here this morning. Structure, still relatively mildly backwardated. I'm going to call it compared to where it has been in the past couple of years.
Yeah.
WTI hovering around 76.58. Again, they're moderately backwardated. The big move this week or last week has been on the product side with gas oil taking off like a rocket with issues with Northern European refiners. And the fact that, gas oil flows take a longer lead time to get to supply than they used to in the past.
That's right. I mean, what the gas oil crack now that gas oil refining margin in Europe is just above $27 a barrel this morning. That's up $10 a barrel in the last 5 weeks.
Yeah. And you've got the Rhine River levels dropping. So the Cobb is right around 90 centimeters. It's going to get a little bit of a refill here as rain's passing through the upper Switzerland plateau. So we'll get some refill in the Cobb, get it back up to 110, but that's going to help supply issues into southern Germany, as the Wisserham refinery had an outage, which basically has tightened up diesel supply in that region as well. So there is a definite supply crunch in Northern Europe with refineries having operating issues.
Yeah, I mean, stupid rain. I was so looking forward to a weekend of sport, with the Ashes and then the British, the Open, the only Open, the US Open is not an Open, the Open Championship golf. But it was raining. It was so miserable. I was looking at it thinking, I felt cold. And then, of course, I stepped outside and it's 54 degrees. So it's a bit different here. But, yeah, it's I don't know. Look, my dad always used to tell me, don't talk to me about droughts. I remember the summer of 1976, son, which would have been the big drought and everyone had to go and fill up their baths from a standing pipe at the end of the road. But, look, I mean, I've always known summer when I was a kid, it would be really hot and then it'd be torrential rain. These days, weather stories are embellished, shall we say, because of what's happening with climate change. Now, arguably, I'm not saying climate change isn't a thing. I'm talking about how it's reported. Manchester rain in summer is not unheard of. wildfires, sadly, in Greece, humanitarian peril aside, as we always put in that caveat. I hope everyone's okay. That's a seasonal thing, as are wildfires in Canada, as are bushfires in Australia. I just wonder if it's being blown out of proportion somewhat from this Greta Thunberg drive. I'm not, like I said, not dismissing it. I totally know what's going on and the renewable and blah, blah, blah. But I just wonder if there's a lot of embellishment going on.
Well, you got headlines drive newspaper sales. I think that was Hearst. So why not push something to put it out in front and face of everybody to get everybody on board. A lot of changes going on in the world around reducing emissions, reducing greenhouse gas emissions. You've got a lot of new rules and regulations that are going to start coming into play here in the next 4 months, 5 months.
Yeah.
Start of the EU ETS for shipping, which is something that I don't think a lot of people are aware of. And if they are aware of it, they're trying to figure out how to maneuver around that.
Yeah.
But this is where maritime is going to become part of the carbon emissions market in Europe. And all at extra costs.
Yeah, and it's going to become more and more the ignorance card that perhaps people are leveraging off right now, perhaps will be less and less used going forward, because there's a lot more a lot more enforcement of these regulations. But look what happened this weekend. There was a G20 summit. India are holding the current rotating presidency on hosting the meetings. There was supposed to be a sort of what do they call it, a communique where everyone got together and agreed about the future of renewable energy. Nothing happened. I'm not surprised by that. This is not a Paris Accord or whatever it might be. It's it's a wider ranging issue. And whilst this podcast only talks about the dirty side of oil, we have to obviously address the renewable side. But nothing came out of India, and like I said, I'm not surprised that it didn't. So I don't know. It's it's a conversation that will drag, I think, rather than anything actually get done meaningful within the next sort of 3 or 4 years.
Well, it's like even with the IMO and the MEPEG 80, they just finished in London a few days ago. That was considered by a lot of people a bit of a lackluster response, because everybody was hoping for the big audacious moment where there'd be a massive change in the stance. But when you're trying to herd 170 cats to get around the table to agree to something, of which I would say 40 or 50 countries are fully on board with, you got about another 40 or 50 countries that are kind of halfway there, and the rest are just kind of in the background, not really willing to make the leaps just yet because of the impact it's going to have to their local economies. So same thing with the G20. I mean, you've got part of that G20 are well on board the renewable front. They're making the investments, making the changes to the legal frameworks, making changes to their fuel blending standards as well. And then you've got the other 13 nations that are a bit, not really needing it, because we've got all this wonderful cheap energy coming into our backyard from our friends in Russia. So happy days.
Exactly. And before people look at this podcast and go, is this called the smoking barrel or the green Johnny polar bear dolphin friendly set, whatever?
Our dolphins and our
we're all things fossil fuels, of course we are. But yeah, look, I mean, that's the again, I'll go back to how much Indian refiners are buying Russian oil. 80 million barrels scheduled to be bought in July from the Indian refiners. Arguably now, and said last time, I think on the last episode, that's probably the limit India can buy, just infrastructure wise. Dollar, how much they can pay, because obviously can't pay in dollars. However, there was a significant meeting last week. Modi was in France and in the UAE, signed a significant energy agreement with Total. He signed one with ADNOC Gas for a 14-year LNG term. And he's also managed to agree that he can pay, dirham versus rupee. There'll be a specific channel there so they can pay for certain things. Whether oil is in that, we're not sure yet, but I'd imagine it is because of the peg, dirham, dollar. And they're not doing anything wrong by doing that. It's not sanctioned.
No,
Not
there's
by
nothing wrong with that.
no, exactly. Yeah,
It's as the one thing about anybody has to look at their own economic benefit of their country. India being 1.4 billion people and growing. I mean, energy and energy security is probably one of their biggest worries between that and food security. And so, India stopped exporting rice last year, and they rolled that export ban for another year, especially just a way to keep their own people fed and keep the rice inside. Because India does have tremendous agricultural power and they can grow a lot of food. But the same thing on the energy side, you can't fault them for going after cheap energy. It's just
no,
it makes a lot of sense. I mean, if you look at all the countries in the world that are having poor economic data coming out with PMI manufacturing data and industrial production data, India is a shining star right now. And India is a shining star because they've got a lot of cheap energy coming at them, which allows them to keep their economy moving on full throttle without any issues whatsoever.
yeah. I mean, on that, so I was on the local radio station here this morning, because the president of the International Energy Forum, American guy, Joe, you might know him. So you Americans are all mates, or buddies.
Yeah, there's only 350 million of us.
Well, his name's Joe, right? There's only two Joes I know come out of America, and one of them's president. Anyway, he said that he's worried about the supply side of the coin. He said that the oil market does not have enough oil supply. Now, me being the tactful man that I am, answered this in the most politically responsible way that I possibly could and said that he was wrong. Because, look, I would argue that if you're OPEC, largely this year in a fairly range-bound market, you could look at it and say, job done. Because they've managed to react to market conditions. They're more worried about what's the word? They are pessimistic. They are pessimistic optimists on how demand will look second half, which is the narrative that we've seen throughout the year. I can't see and form an argument or agree with Joe, your mate, why he's worried about supplying the oil market when the whole reason the oil market is where it is because oil supply has been voluntarily choked off. So there is plenty of supply, more coming back, more available. I don't get that, why he said that. Can you help?
Well, I mean, I would think that his issue is that there is supply that has been voluntarily cut back, and then there's supply that's been politically cut back, i.e., look at the KRG exports out of Seyhan. That's 450,000 barrels a day, which has been off the market for the better part of 2.5 months now.
Yeah.
Because the Turkish government and the Iraqi government can't come up with an agreement to pay back the $1.4 billion that Turkey is supposed to owe Iraq. So you have that. You've got Libya, that's borderline turmoil once again, as Haftar is looking for more money from the NOC. He wants to appoint an independent auditor to check the finances because he thinks that the eastern side of Libya is not getting their money, and he's basically given the unity government till August 31st to provide the data. Otherwise, he will shut down Libya's production.
Yeah.
So there you've got 1 million barrels potentially at risk. Then you've got Nigeria.
Okay.
Nigeria's got all their problems. Well, it's not 1 million in Libya. Let's call it 800,000 because I think that's the majority from the eastern fields on 800,000 a day.
Yeah.
Nigeria off and on problems. Forcado is currently a force majeure due to thievery. That's 350,000 barrels offline. So
that's fine. But look. But
if you take the voluntary production cuts from OPEC, and you take the non-voluntary cuts that have happened because of political issues, I mean, you've got an additional 700 to 800,000 barrels that's been off the market because of that. Now, yes, Saudi could get off of their domineering point of view and reopen their supply and put themselves back up to the normal quota level. But then I think you tip the balance of this market to an oversupplied situation rather quickly because the overarching demand is not there based on the current oil supply.
Yeah, look, I mean, of course, I agree with that. If you look at Libya, Venezuela, Nigeria, places that have been in civil unrest for a number of years now, getting on 2 decades, July figures year on year, Libyan oil production has doubled. Libyan oil exports.
No, Libya right now is stable, but there's that underlying threat of.
Yeah, which has always been there, right? But I know what you mean. Venezuela, they've now signed the agreement with Chevron to repay debt. We've got oil production increasing about 100,000 barrels a day there. Nigeria's up 400 last month. But these are very volatile countries when it comes to force majeures or political rife, whatever the issues might be. I can't imagine that there's anything other than some contingency put in place by OPEC when it's coming to stability vis-a-vis supply from those three countries. Well, I'm referring to, UAE, for example, have got a plan to produce 5 million barrels of oil by 2030, which is another 1.5 million barrels a day from now. That is firmly on schedule. I just can't buy the argument that, and nor I don't think would OPEC want a headline coming out saying he's worried about supply, because I think that would imply that markets aren't stable and would increase volatility, something I don't think the OPEC group would welcome.
Well, my whole take on the IEF's statements is that he's also using, I think, bad demand data from the East, because his statement was couched in the fact that, Asian demand is picking up and we don't have enough supply. Yet when you look at the recent downgrade of GDP forecasts now for China across the board, banks are now at 5% GDP from 6.5 at the beginning of the year. Now they're at a 5% GDP growth for China, which kind of matches the PRC's initial forecast.
Yep.
So that has a complete knock-on effect as to how much oil demand there will be in China coming into the second half of the year. And it's not going to be the big number that everybody was playing with back in Q1 and Q2 that I questioned.
Yeah, we both did.
Question massively.
Yeah.
But nevertheless, the market currently has a bit of a fear premium, I think, in the front end of the curve. I mean, part of the reason why we're at 81 is supply issues. Part of it's also, things in Russia are kicking off to be a bit worse, with Russia pulling out of the grain deal. That's a lot more focus on Black Sea transits of oil as well as other products.
Yes, disaster for global wheat prices. That is
disaster for wheat. But just think about now that if Ukraine starts targeting civilian ships carrying oil.
I mean, US wheat is up 4% today.
Yep.
Orange juice up 10%. I can't believe that's linked. Ignore that. But look, I mean, it was a question I was asked by every single trader last week when I was in Singapore, and I was, was busy, and everyone was saying, even the Chinese traders were, Chinese data is not as good. But if you look year on year and then crude imports, June 2022, China imported a total, I think, just under 290 million barrels of crude oil. In June this year, they imported just under 400 million barrels. I don't know whether that is, they think prices are going to go higher, so there's some stockpiling. I don't know whether it's because they're going to get new export quotas, so they need to refine more crude. But if you're looking at the numbers year on year, they don't lie. That's a significant uptick, 45% year on year. That's a significant uptick.
You can paint that easily within the eyes of COVID versus non-COVID. Last year, they had rolling lockdowns throughout the entire country. So how much energy demand did they actually have? This year, they've got a lot of Russian oil coming in, cheap oil. So of course, my thought is they're buying more, and they're also exporting more product than they did last year. So you do have a higher run rate through the refineries, but I think a lot of that product is being pushed out of China into the export market. And it's all part of this case to help support their internal GDP numbers, because refining crude oil is a big boost to their GDP.
Yeah.
And so it helps support their economy, because all the other things you see about the Chinese economy through real estate, through manufacturing, through industrial production, are all lackluster. I mean, China's, part of the rally we had last week was because the China Economic Forum decided that they needed more stimulus for people to buy cars and electronic goods.
Yeah. I mean, look, if we put it into context, I mean, things are okay. There's a big Fed meeting coming on this week. But Brent, if you look at just in the vicinity of energy prices, Brent year on year is down 23%. Right? the same fundamental issues are there apart from energy security. That was a one big concern people had this time last year, and it was still being priced into the curve. Now, a year later, oil is moving as we thought it would, as the market, you know, the initial panic, where we're going to get all the diesel from, you know, that's steadied. Freight has somewhat steadied, even though it's still relatively high. But Brent is down 23% year on year. So I don't know. If you're looking back a year, OPEC, if you're an OPEC member, oil revenues, the coffers, are down 22%, 23% what they were this time last year in terms of prices. So to me, I think flat price is being protected by the powers that be. And I think it's clear that there is a $70 floor on prices right now.
Oh, I think that's a well-defended number.
Yeah, because I was reading the Bloomberg article this morning saying that the S&P 500 is 260 points away from erasing the bear market we've been in for the last 20 months. You know, we've got, like I said, Fed coming out this week. People are still worried about inflation. In essence, we're going to talk about CPIs and inflation numbers in a minute. Of course you are. Edwards 101 wouldn't be a weekly smoking barrel without Edwards 101. But, you know, things are just plodding along quite nicely. Even if flat price is down, it's stable. And the market is buying into the rhetoric and the narrative that things are okay.
Well, in order to support any economy, having stable energy prices along with stable food prices are probably your two biggest drivers to having, you know, to remove any recessionary fears. Because as long as you can plan and you can manage that cost structure of running a business, knowing that my energy prices are not going to fluctuate, you know, $100 or 100% throughout the year, they're going to stay within a nice narrow band, then you can actually start making forward forecasts and actually hitting forward forecasts because you're not worried about fluctuation in the random walk of how oil is going to move throughout the period. So if OPEC's doing their job and quote unquote not worried about price but market stability, then yes, they've done a great job. They have stabilized the market. I think that, you know, if we look at this from, you know, the PMI data that's bound to come out this week, there's a lot of data coming out this week before the FMOC meeting. I think the interest rate story, you know, we're probably coming to the end of interest rate hikes. I mean, I give it a 65% increase for a 25 basis point increase, 35% for a probability for a pause. And because, you know, if you look at the US data has actually been okay, and it hasn't been ripping too high. Wages are still doing okay. They're not ripping too high yet, but you still have a lot of labor uncertainty in the US, like the big strike, the United Parcel Service, which is the big package delivery service competition to FedEx. You know, they're currently having negotiations with the Teamsters Union, which is the big truck driver union, and their warehouse workers, 30,000 members strong, that work for UPS. And if they go on strike, you're going to shut down a whole sector of the US economy because those packages won't get delivered.
Yeah, look, I mean, I was talking to someone about this the other day about, oh, you know, the security staff or the tube workers in London are going to go on strike. I was like, yes, it's like news that we used to get like 4 years ago. Oh my God, I can't get the tube to work. That was a problem. That was a problem that people had. It was a proper problem. Oh, Christ, I can't stay out in the pub until closing because I can't get home because the central line's shut because they're on strike. That was a nice problem to have. I want to hear these stories. I hope everyone's all right and gets what they want in terms of pay. What I don't want to hear and what the oil market doesn't want to hear is the threat of military action. You know, what's going on in Russia, Ukraine, the Taiwan tensions. You know, the market wants to leave all that behind. COVID and military conflict, and I wish everyone's all right and safe. I want to hear that the postman, Johnny Postman, is going on strike because he doesn't get his coffee break at 11 o'clock as he used to. That's a problem I want to hear.
No, he's going on strike because of cost of living increase is still impacting his, and he has to have wages to cover his cost of living.
Potato, potato.
I mean, food inflation is going to be a big issue for the second half of this year, especially with the grain deal squeeze out from Russia.
Yeah, you know, call me skeptic, call me an old man, call me what you like. I wonder if there's more behind it in terms of the Russians have pulled out because they want to renegotiate. Then they realize what it means for global energy. Then the world realizes how much they rely on Russia. And then they re-sign a deal and Turkey broker it, and everyone looks at Russia in a nicer light. I wonder if it's more PR than anything.
Well, I would hope so, but when you're striking grain stores with missiles, that's a bit of
yeah, that's a bit much. Yeah.
bit of a hammer.
Yeah, I can't defend, and I'm not defending them, but that's a bit much.
But anyway, so as we look at things going forward, sideways markets, looks like refining margins remain supportive as long as refinery issues keep on happening around the world.
Yeah.
I think at some point we probably do need to dedicate a moment to talk about the EU ETS and the fuel EU maritime rules that are coming into play.
Yeah, we've done enough green today. We've done enough green.
I think that's going to be something that the viewers might find interesting, because of how that's going to roll onto the net cost of fuel oil, crude oil, gasoline, diesel arbs, and intra-EU trade.
Yeah. I mean, it does need some time on that, because I know you've been working on that. We've written something about it as well. Our colleague Rebecca. It's one of those ones that people have got on the desk but haven't read yet, and every time they look at it, they go, "Oh God, I've got to get around to that." But it's certainly something that we need to discuss for sure.
Well, as we close out this episode, crude's really done nothing. Still around 80.72 on the Brent and 76.58 on the WTI.
Well, that's because the market's waiting to see what we say.
Well, that could be.
Yeah, right.
Well, as we bring this episode to a close, thank you all for all your subscribers. Irene, keep up the good work, doing a great job. We love you.
Yeah, we love you, Irene.
We look forward to our next episode.
Like, comment, subscribe.
Thank you very much, and you all have a wonderful trading day.
Ciao.